Cathie Wood just called out Wall Street and the billionaire Charlie Munger, who much rather prefers BYD over Tesla stock. Cathie says Charlie Munger and many on Wall Street do not understand that passing along the lower costs associated with technologically enabled innovation, in Tesla's case, batteries and drivetrains, will cause a boom in unit demand. Cathie also sounds incredibly bullish. One more thought. ARK Invest has a 5-year investment time horizon. Now that the most brutal interest rate increase in history is near an end, growth stocks in general and innovation-based strategies in particular should make up for lost time. Not just recover, but make up for lost time. That sounds very bullish to me. The future of investing is investing in the future. That makes sense. That's why I am investing in Tesla stock. ARK Invest's chief futurist Brett Winton was just interviewed by Meet Kevin. Brett shared ARK Invest's latest thoughts about Tesla and Tesla stock, as well as the investor day. It was pretty good, so let's take a look.
March 1st, I think Tesla's going to announce a vehicle that'll, they'll claim they're going to be able to produce for half the cost.
You think they're going to announce a car?
Oh, yeah. I mean, they've definitely indicated that they're likely to.
Wow.
So I think it'll be a new model that will be very economical and tuned to be a robo-taxi, probably, and that it'll just like set the entire industry offsides on a cost basis again, as in now kind of like industry is trying to like design how are we going to scale, and they're just I just think they're designing for a cost of manufacture that is going to not have them able to profitably compete with where Tesla's at.
But Charlie Munger says BYD is better.
I mean, I think that for one thing, the Chinese market is like a very different beast than the U.S. market, and I do think
average vehicle's what, $14,000 there. Our average used a new car price $47,000, somewhere around there.
Yeah. I don't know about the Chinese average, sure. but there is like a whole class of vehicles that's more like a neighborhood electric vehicle. So it depends on how many of those you bundle into how you do the averaging. Okay. But in net, I think within China, it's more likely that Tesla sits at a premium tier and is not competitive with real mass volume manufacturers hitting the Chinese market.
I think once Tesla releases the next generation platform, it will be a mass market vehicle even in China, unless that vehicle looks like this. Yeah, when we are doomed. Hopefully it looks a little bit better, although this still maybe is not exactly perfect. But if it looks more like this or this, I think, yeah, Tesla will be just fine selling to the masses.
It's very clear to us that almost all of the auto market is going to become electric drivetrain based. We think within 5 years, it'll be 90+% of the auto market.
That is quite bullish, but when you look at the data, it does make sense. Norway, for example, once it reached 5% electrification for new vehicle sales, including plug-in hybrids, it took it 10 years to get to about 90%. So 5 years from now, if we look at US in particular, 1, 2, 3, 4, 5 right here, Norway was at about 60%. However, EVs are getting better fast. The kind of EVs that you could buy in Norway 8 years ago, they're not very good EVs. So it does make sense that other countries would adapt faster.
There's a reason that Ford ended up with way too much harness in its vehicle, like you said, and it's because they probably didn't take a first principles approach to design, I just think that there's like huge problems in legacy automakers, even leaving aside the pressure they'll face from robotaxi and the fact that they have a lot of auto loans on their books that probably aren't going to look very good over the next few years.
Here's a thermal system from a Model Y. And then the same thing from the Ford Mach-E. So unnecessarily wasteful.
I suspect the product they'll release will be this is an inexpensive vehicle platform to manufacture that's optimized for adaptation to robotaxi, but also we can sell it into people who, are the kind of like median car buyer, not just the average car buyer in the US, which is a lower price point.
So that would be the $25,000-ish car plus maybe some inflation since then.
Right. And yeah, I don't know what the price point would be, but think about, half the cost to produce of the Model 3. And so if the average Model 3 is selling for 50, yeah, maybe 25 or 30.
And why do you think they would announce that now?
Why? Because I think that they are gearing up to manufacture it, because they are...
Even before Cyber and Semi?
Well, no, I think they'll announce that they're doing it, they'll reveal, just like they did with the Cybertruck, they'll reveal what it looks like, and then they'll go through kind of engineering for manufacture, and so that'll take a year or two.
It looks like Meet Kevin disagrees with Brett on this point. I think it would be better for Tesla as a company to not announce the cheaper vehicle until it is pretty much ready to be produced almost immediately. For the stock, though, it is better short term to announce the vehicle to everyone, even if it doesn't go into production for another year or two. The reason why I think it's better for the company to not announce it immediately is because of cannibalization, especially in China. In China, most of the Model 3 and Y sales come from the cheapest trims, which is different from the US. In the US, not that many people want the cheapest trim. People want more range, people like more performance. But in China, it is different because people don't have as much money. So if you are already stretching to buy the Model 3, if you know that soon you will be able to buy a cheaper vehicle from Tesla, I think many people will choose to wait and not buy the Model 3 or the Model Y if they like that cheaper vehicle.
Yeah. Wow. Okay, so all in on Tesla except when Jerome Powell gets angry, huh?
Well, despite increasing interest rates, Tesla stock did go up 92.7% year to date. So it's not all about interest rates, although lower interest rates would certainly help. But if Tesla sustains 50% year-over-year deliveries, I don't think it will matter much what the interest rates will do if you are a long-term investor. Although, of course, if interest rates are low, growth companies get higher PE ratios, boosting stocks.
Well, I mean, listen, across the board, innovation stocks have underperformed, measured on a year-over-year basis. There's no question about that. I think that what's really fascinating for me is that the rate of technological improvement across the technology platforms that we focus on has never been faster. Like at least in my career of looking at technology and markets, it's in the AI space, it's gone from I was having a hard time keeping up with the academic papers to then having a hard time keeping up with the product launches.
That's just one more reason why I believe full self-driving is inevitable.
What's your take on really legacy auto's ability to be able to compete at all in this EV space?
I think it's unclear that they can. I mean, I think Tesla has, just on a drivetrain efficiency point of view, I think a 3 or 4 year lead. And so that's
just on manufacturing.
Yeah,
okay.
It's basically just like how performative a drivetrain can they make per dollar, drivetrain inclusive of the battery system. And what that means, I think that the challenge for legacy auto is they still, it seems to me, are on like a 4 or 5 year kind of like design to kind of production innovation cycle. So, and they're stuck in a very like routinized kind of half decade cadence of like, this is how we game plan and then launch in advance. And it seems as if they, it's like once they get a year down the track, they're kind of like tracked into where they're going to hit. And so then the problem is in You kind of saw this with the Model 3. It's like Tesla launched the Model 3 in 2017. It took all of legacy auto 5 years to release models being released this year that are roughly as performative as that 2017 Model 3.
Yep, for example, take a look at this. Models of light-duty electric vehicles in the US with over 300 miles. In 2020, there were 0 other choices. In 2021, we had 1 choice, and that was the Ford Mustang Mach-E. And then in 2022, we got a whole bunch. But back in 2017, when the Model 3 came out, only Tesla could actually do it. Another thing that's rather obvious looking at this chart here as well, if you look at the pricing of an EV that's at least 300 miles, it used to be quite expensive before the Model 3. I mean, you could have gone to the Model S or the Model X. But if you look at the Tesla Model 3 price, while it did increase at first a little bit, it has basically stayed flat, and now I think it is going to come down. I mean, we certainly did have inflation from 2017 until now, right? So this is actually looking pretty good. Because of inflation, the average price of a new vehicle kept going up and up and up and up. But the Model 3 started above the average price of a new vehicle, and now it is below. That is good. It shows that Tesla is making progress with manufacturing because margins have remained pretty good. Although, let's see how margins look for Q1 of this year. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.